The following is a long open-ended conversation with Shan Liu, Head of Incubation and Director of the Middle East and North Africa region in XT Labs. We had the opportunity to talk many topics, like the pursuit to get into venture capital from her background as management consultant, how sustainability is affecting the finance markets, especially the crypto markets, and how these new funded technologies are affecting and embracing many features of businesses, like right now, the merge in the Ethereum markets. If you like this episode, please like and subscribe and contribute to the channel on the description below. And now, your featured presentation. 3, 2, 1. Ladies and gentlemen, welcome to another episode on the Long with FVR. Today we have Shan Liu. Thanks for doing this.
Thank you, Fabian.
So it is very important to recognize that we are living in interesting times, and we are recording this just 4 days, I guess is maybe 5 days before something that is going to happen in the crypto world, which is the merge, right?
The merge, yeah.
Yeah, so fascinating going on. People that maybe has been hearing about that, but I guess more important is to start discussing a little more about you. So can you tell us a little more about yourself?
Sure. Hi, everyone. So I am a graduate of 2022 class in the SP MBA. And just in May, I joined the crypto world in the first year exchange, which is xt.com. So it's been a really exciting journey. I mean, transitioning from consulting before I joined the MBA program. Then I did an MBA majored in finance. Then now transitioning into the financial industry at the forefront of technology innovation and leading the team in the venture capital arm and the incubation center. So a lot of learning and a lot of excitement throughout the journey.
Wow, that's such a impressive thing to realize, because the journey is not about the destination but also the paths that it took you to go there. And talking about the paths, just been in Kuala Lumpur, but just been also in other places before. So people remember what happened in Cambridge. Some people who watching this were in Massachusetts, but they were in April. In which month did you were when you visited Cambridge?
That was around December, just around Christmas. So I went to Boston. Then I visited around the city. I stayed in different locations in Boston, and I really like Boston. So it was in winter. So we spent December, January, and February there. And then at the second week of February, we went to Dubai. So I think I still can remember each of the weekends. There's always winter storm in Boston, and each weekend we would plan for the next weekend to go explore the city. However, that was stopped because of the winter storm and the mounting homework, of course, the heavy workload from MIT. Right.
Now, you said something about Dubai, because after the Cambridge trip, you went there. There was something called the Expo, but I'm still unfamiliar. Can you tell me what was the Expo going on?
So it's a bit awkward because when I visited Dubai in the Expo, it says Expo 2020. So it kind of reminded us that the pandemic has been going on and still continuing for almost 2 years at the time we visited. And so basically in the Expo, you can visit all the different themed pavilions. So there's nation-themed pavilion like Germany, China, and then Malaysia. Actually, we went to Malaysia pavilion to test nasi lemak in Dubai.
Oh.
And then the one that most impressed me is the German pavilion, whereby you see so many innovations, technology innovations, the applications of the innovations being displayed at the multi-floor pavilion. So it's basically a window to the world of each of the country, or in some cases it's a united region presented by a pavilion to showcase to the worldwide visitors what is this country famous about. Just get to know a bit more about the culture and the technologies, the people. So it's a really fascinating journey.
And I also I can imagine the contrast, because you were spending months in the snowstorms of Cambridge, Massachusetts, to be under the sun of Dubai in Middle East. So how was that contrast for you?
Exactly. I think that journey in our MBA really set the foundation for my current job because I'm traveling every month from east to west to Middle East and back and forth. So that journey from winter storm, like initially from KL, right, a tropical area, flying to Boston, where we have to survive in the temperature of -20. Then suddenly we travel from Boston, which is -12, -20, to somewhere that is +20 Celsius degree, and it's a desert area. So in the beginning, it's difficult to realize these changes, especially the dry weather in Dubai. Then 1 week later, after I was there, I realized, I need to replenish the waters much more often because I need to prevent from dehydration. But also the cultural differences, the formation of the city, the landscape of the city is so different, and you get to used to that diversity and the very quick change and shift of the environment over time. And then that develops my adaptability at work. So when I was traveling now, I have to constantly adjust to the time zone differences. And I feel I'm better at that comparing to my peers because the experience we had in ASB.
That's really remarkable because not many people first know how to work in different time zones, and let alone the little differences between people that lives in different time zones. Which has been the most challenging time zone difference that you faced so far?
Yeah, so at XT we cover about 15 different countries. In some of the countries we have physical offices there. In the others we have remote workers. So it's quite challenging because in my daily work I have to communicate with colleagues from at least 4 or 5 countries on a daily basis. So for instance, our global headquarters is in Dubai, while the marketing team and the business development team and HR functions are scattered around in Singapore, in Shanghai, and in Shenzhen, for instance. And we have tech and operations teams also in Malaysia, in Shanghai. Then we have our private equity, our venture capital arm, and our business development team in US, both in New York City and in Palo Alto. So it's very challenging, and sometimes you have to adjust yourself to the time zones of the other colleagues when there's an important meeting you have to attend, you have to accommodate. But I think over time, especially being in Dubai gives me a big advantage because Dubai is mostly connected to each of the region, each of the country within a time gap of 5 hours. So being there shortens that sense of the difference. When I'm back in Singapore or in KL, for instance, I also feel closer to the Shanghai team, to KL, Malaysia, Philippines, all the Southeast Asian countries. But I think the biggest gap was when I traveled to Istanbul in Turkey. We have offices there. And because of the language barriers, so I basically cannot survive without Google Translator. And also the time zone differences is bigger. So it kind of depends on where you are. For me as a constant traveler, now when people ask me where are you based, literally it's up in the air.
Or you can say you are based in planet Earth. Now, talking about planet Earth and the different time zones, is I would say remarkable to mention that so far in this episode that we have in the podcast series, we got people from many places, but I believe you are the first one from China.
Oh, really?
So,
Pleasure.
which city from China you're from? And can we know a little more how was the journey growing up?
Yeah, sure. So I was born in a city called Yiwu, and it is the trade center, now the international trade center in China. And it's funny that when I grew up, I was in the environment with multi-ethnic groups, with a very diversified culture. because the city is famous for the center, the hub of importation, exportation, the starting point of One Belt, One Road. And I saw a lot of Middle East people, residents there when I grew up. So later on, I moved to Shanghai, which is where my family now reside in. And I developed most of my network, friendship and colleagues network in Shanghai now. Transitioning from a trading center to another like metropolitan city is a journey to adapting to the differences. But also, I never imagined myself to work in Middle East. Since I was young, I always felt it's very distant culture, distant place. I would never go there. And then I received my education mostly abroad in Europe and now in Asia, of course, and in US. So it's really exciting to transition from one location to another, to Europe and back to Asia, and then exploring these different cultures. So I think it's really through this exposure to the different countries, different cultures, I kind of really now can appreciate the differences and can involve myself into the communities. So let's say, for example, when I was 5 years ago, 6 years ago, I was doing my first master in Belgium and Netherlands. That's when I first studied abroad, and I have to learn the local languages, which is Dutch and French, Flemish, to get to adapt to the student bodies. And I live in a family where the locals are all Christian. Then I joined the Christian as a Christian, and I went to the Catholic schools and served the church. So back then was more about trying to adapt to the culture, fit in myself into the community. And later on, especially the education in SB, every semester we do projects with at least 5 different team members from different cultures, right? So that diversity also brought questions like conflicts, and then you have to think, how do I face these conflicts? How do I set the right communication methods to adapt to these different conflicts? And then those exercises really strengthen your muscle to deal with the differences. Now I am working in an environment where we have employees speaking over 13 different languages, and then over around 19 different countries and ethnic groups. So it's kind of like doing another MBA in a sense, because each of the project we do, it's in a mini group of 5 to 6 people, and these people usually speak, on average per person, speak 3 or 4 different languages, and then they are from different countries. So it's kind of like doing an action learning again and again.
Oh.
Yeah.
That's really impressive, because the pursuit of always trying to not only learn better but also do better is really important. Now that you mentioned about going from that time that you were growing up in China, and I believe now things are a little different as the development has been going on recently. People here in Malaysia, they are very proud of their food. So I need to ask, how different is the food from Malaysia from the food that you find in your first city?
I think Malaysia is a really unique place in terms of food. It's a paradise for food lovers. Here you can find Chinese food, Malaysian food, Indian food, Indonesian food. Basically everything you can find it here. And then you can find those fusion food, which combines the elements of traditional Chinese food and the local flavor, right? So, for instance, if you go to the Chinatown, you will find the kuotiao. But in my hometown, kuotiao is using different sauces, not maybe in this flavor, but it's again kuotiao. So that immediately brought me back to my hometown. And then we also have 粉丝. And then just last month, when I was talking to my colleagues from Indonesia, I realized that that fansi was also something very popular in Indonesia, and they call it differently, but I think it's a Chinese name. They call it fansi.
Oh,
Yeah. So I do find that the Asian culture has been passed down from the inland, from the mainland in China to here, maybe several decades ago, and then they adapted to the local weather, to the local flavor. But I still can find that intimacy of the flavor with my hometown's flavor. So that's something really interesting.
yeah, I have to say because here I realized that they don't give you a knife, they give you a spoon and also the fork. But if you go to places like brickfields,
Yeah.
they will only give you like the chopsticks and that's it. And also, it's fascinating to see that in those areas, the first thing you don't read English, you don't read Malay, you first read Chinese, and then I guess it's English, but in a very minor character. So it's like I have to learn this language, otherwise I will not find my way. And that has been like a learning that has been experiencing as well during the summer.
Yeah, I think that's the beauty of being in a multi-ethnic, multicultural setting. So when I was in Belgium, the northern part and the southern part of Belgium was quite split. It's a disparity of mentality and the languages they speak. And I somehow suspect it's because of the languages they speak, so they carry different values and ways of living. So in the metro, you will usually see two stacks of newspapers, one in red color, the other in green color, to separate the two different languages. But
Okay.
when you go to a job fair or you are graduating and then you go to these networking sessions, you should see everything will be in door languages. So both in Dutch and then in French. Yeah, so I think it's something similar when you are here. Usually in the airport, in everywhere, you will see English and Bahasa. And in some cases, especially in communities where it's of high Asian population density, you will see Chinese, Japanese, and then Bahasa, and then English.
Yeah, it's true because I also experienced some of that when I was in Singapore, and I found more characters in Chinese than in English, even in the metro.
You know, that's why, because the population majority are Chinese. Yeah, Chinese Singaporean are originally, I think, a large portion, the immigrants from Malaysia, right? The Chinese Malaysian. Yeah.
That's true. Now, something that people may be asking, because what made you enter into the field of financial technology? Because you mentioned at the beginning you were into consulting. So, what you were doing before entering ASB, what you were doing, what kind of consulting was that, and what made you say it's time to get into the financial technology?
Yeah. I mean, it seems to the others that it's a major shift, industry shift, as well as function shift. So when you first enter into the MBA program, you probably will have the lessons, the immersion week with our dean and with our CDOs, right? And then you should set a right expectation of only change two of the three. What are the three? Number one is geographical location. Number two is the function. Number three is the industry. Most of people, they enter into an MBA in search of changing two max of the three. So I was actually very ambitious when I entered the MBA that I want to change the three of them. So before I joined ASB, I was doing strategy and innovation consulting. What does that mean? So basically, we cut it by function, by capability. Function means in which industry, in retail, in consumer goods or financial services, and then in terms of the capability, do you deliver HR consulting? Do you deliver supply chain consulting, operations? or anything else. So back then I was mostly doing for consumer goods industry, luxury brands, for instance, and then helping them to do digital transformation, to streamline the operations and introduce more automation into the process. That's what I usually was good at before I joined consulting. So I did my first job in Apple, where I helped automated a lot of process flows. And I was really passionate about technology long time ago because I was born and raised in the environment. My parents and my uncles, they are all self-starter entrepreneurs, and mostly in technology and pharmaceutical. So I really witnessed the paradigm shift of the technologies. Take for example, when I was at primary school, so I was selling cassettes. Then when I entered into junior high, I started selling Walkman. Then after a while, I started selling MP3. Then there's something called iPod Shuffle come to the world. So I witnessed the whole process. Then I studied innovation strategy in my master when I was majored in economics, and wrote the master thesis in open innovation. So that's how I developed my passion and interest in innovation. And I always know that one day I will go back to the core of the innovation, being in the private equity sector, leading the technology innovation, not just applying the technology, but leading the future innovation. So that was the goal when I entered MBA. I want to shift to the private equity sector, the venture capital side, being an investor that enables you to see all the innovations going on and to spot the unicorns in the industry. So when I started the action learnings, I was very purposefully choosing the projects that fit into that appetite. And also in each of the semester, the projects I did is relevant with that goal. Either that I throw myself into an entrepreneurial project where I develop technology product, or that I was in an investment banking project where I developed a brokerage, a trading app. So I think those were all the relevant experience that helped me to bridge the gap of being a consultant to a private equity investor. And very fortunate, I think, due to the resources that the school has, I was doing my summer intern, the associate program in Kazana at the PE team. So whereby I helped to scan the whole SEA, the Southeast Asia landscape about consumer goods technology companies, and helped with the due diligence process with 2 of the unicorns. So then later on, I did another internship at a top 20 VC firm in China. So whereby I reviewed about 300 projects across SaaS, hardware technologies, consumer goods, and pharmaceutical. So I developed a lot of industry know-how in terms of how to judge a project very quickly, and what are the common traits of high performer teams versus low performers. What are the logics and the metrics that you should use to evaluate when you enter into the due diligence process. So again, I think that rigorous training plus the courses we take at school. For instance, my favorite course is financial accounting, managerial accounting. Those quantitative courses really helped me to build the foundation layer, entering into the FinTech industry. Looking back, these skill sets are still quite relevant and applicable on almost a day-to-day basis. Yes.
So that answers one part of the question, which is innovation and how to close the gap between management consulting and financial technology. But some people right now are watching what is on your T-shirt, and that is like a blockchain company.
Yeah.
So the second part of the question that we want to
How
learn.
do I get this job, right?
Blockchain itself.
When I did my second entrepreneurial project, which is about recycling the bottles, recycling the package items, and then use blockchain technology to claim green credit points. So for that project, we actually stuck there, and then I realized that okay, everything somehow circulates back to blockchain technology. And in 2021, November 2021, I participated in COP26 as the Chinese representative, youth representative, where I encountered a lot of projects in the sustainable and renewable energy field. And it's the first time I heard about refi.
Oh,
And we talked a lot about committing to the 1.8 or 2.0 or 1.5 goals, but what we don't see is the path to bridge that gap. And a lot of this goes back to the technology, which is blockchain technology. So I really see this technology as a promising technology. What's more interesting is from March to April to May, when I was doing my second internship in the VC, actually already feel the trend of the economic winter. Winter is coming. A lot of the funds they moved their focus from the traditional sectors such as consumer tech or media tech, which they call TMT or EdTech, to the field of Web3. So that's the point, the concept of Web3 really being discussed among the traditional PEVC. That's where I started to look at the projects and then asking family offices, the traditional funds, what their next year's strategy would be. And funny enough that some of the family office, they say they are going to increase their portion from less than 1% to 5% of digital assets. So that's when I started to gain a deeper look into this sector. And I realized that so many innovations going on, and then the traditional players in VC field, they're just increasing their asset allocation into this class. And then the PEs, what you see is they gradually get rid of these traditional tech and then moving into the frontier tech. Why? Because there are less and fewer unicorns that you can invest into in the traditional sectors. And if you look those so-called unicorns, over time you see the depreciation of value when they go IPO. For instance, I think back in July, even starting from last year, a lot of the tech companies, IT, internet companies that were listed in US, in NASDAQ, the Chinese ones, they got delisted. They go back to Hong Kong exchange. However, due to the limited balance sheet size in Hong Kong exchange, they cannot really reach the same unit per share price, right? So a lot of them, they have to downsize their employee size and then significantly transform their business as well, including developing new functions, new capabilities in the Web3 space, investing into metaverse. So this is all in line with the tech trend. In the PEVC, basically what you can think of these industries, they're helping the public sector to accelerate the pace of innovation, the rate of innovation, which the public sector cannot really do by themselves. So a lot of innovation it has to come from bottom up, from entrepreneurs, and then capital plays a significant role in accelerating those and nurturing those startups. So basically, I think Web3 and blockchain technology is where now most of the VCs see the next big opportunity is.
it's fascinating this journey because now, guess what? Action learning is actually focusing on some projects that involve blockchain.
Really?
Yeah, so there is one of these, fingers crossed, it's not located in Malaysia. I will not disclose the name of the company, but they are looking into the blockchain technology to see how they can untap a $110 billion market. Because they realize that if they use the non-fungible tokens or they use the smart contracts, maybe to put some policies to collateralize some assets. So they want to know how. And this is where we enter in the action learning to see, okay, this is like a technology strategy application, which in the end, most of the fund companies and the family companies are thinking about, like how this technology will make them more money. Because sometimes there is a lot of that left on the table and you cannot get it. And going back towards those days you were doing that recycling project, yes, most of the blockchain applications makes life easier. The problem is the maintenance. The problem is the cost of structure, or some environmentalists will say the energy cost.
Yeah.
Talking about energy cost, people has been watching some of your angles that you like most about sustainability. That was the passion that also allowed you to be in the COP26 like a year ago. Tell us a little more about sustainability in your current endeavor.
Yeah, so in my current role, I'm mostly reviewing projects and more from the investment angle. But we do have a few projects that are in the sustainability field. For instance, we have one GameFi project, which is a play-to-earn or social-fi model, where you walk and you run and then you accumulate the credit points. So encouraging you to use public transportations, encouraging you to less frequently using private vehicles to accumulate the credit points, which is somewhat similar as what I did for the recycling projects. So then we also have co-investors, which are really focused on ESG projects. So for instance, we invest into one project, which is called PEAQ. So it just got funded again this summer in July of about $7 million US, which is not easy during this bearish market. So basically, they are connecting the IoT technologies. For instance, you have Huawei OS system and you have Apple iOS. So in the past, these devices built upon these different operating systems, they are standalone equipments. They don't talk to each other, right? So even if you bought all the devices in Android, the Android system do not really openly talk to one another. So this firm is empowering these different IoT devices, energy companies, to build a layer that enables the communication of the IoT devices. So then we also have a partner in Canada. She is a miner, and then she is doing renewable servers. So there are companies in Indonesia that are enabling the sea, ocean power and the wind power to be as a renewable source of energy to fund the mining business. So there are a lot of interesting ESG projects in our portfolio, and we are trying to increase the portion of them. I think a lot of the crypto companies, especially the project side, especially if you look at the exchanges, and when we talk about so much about token value, the tokenomics design, a lot of them, they were about the valuation of the token when they got listed in exchange, but somehow ignore the technology side of it. Right? So when we first entered in this industry, it's actually driven by the vision of the belief in that the technology will enable a lot of changes, such as in RegTech. So in legal tech, they enable the traceability of goods shipping from one country to another. Talking about NFT, what value does that bring? It lowers down the cost of these transactions. When think about a family office want to buy a piece of art piece from Vincent van Gogh, and then how do they transfer the money back from the location where they did the auction to a third world countries like Iran or Pakistan, for instance. In the past, the transaction cost is costly, and it takes weeks to process the large amount of assets. And then in different countries, when they transfer the money, they have the duty to be taxed or to spend certain percentage. In Singapore, it's 7%. Just doing any sort of investment to give back to the local government. But NFT enables that to be minimal cost. Now there's one project in our exchange which is called Red Light Finance, and they enable zero gas fee. So I think the merge will also benefit a lot in lower down these transactional costs, lower down the social costs, really accelerating this digital adoption among third world countries. There's just endless topics we can touch upon really about not only environmental issues, the E pillar, the social problems such as the Ukraine and the Russian war. So a lot of the citizens, they cannot really get access to the foreign currencies, or even inside the country, it's basically running out of foreign cash reserve, and then they have to opt to, and they have to adopt cryptocurrency as a payment tool. Really a lot of innovation going on. So addressing the social pillar. And then G, governance model. So talking about governance model, in the Web3 companies, we are really disrupting and leading the innovation of ways of working. So people can do, most of the Web3 companies, you can do 2 days, at least 1 day working from home. We really emphasize the employees and trying to address their concerns. And it's kind of really decentralized model of managing a company, managing the organizations. So for instance, in Dubai, we're good friends with Polygon and they are our strategic partners. So Polygon's employees mostly just spend their time at home. So they don't have a physical office. They have decentralized labor, decentralized office. Their office is their home. And if the employee choose to work in Dubai, then they go to Dubai. Dubai become their office. If they want to go back to Istanbul, then Istanbul become their office. So it's very mobile and flexible. So I see that blockchain technology or crypto is really disrupting and changing a lot of industries. And then I think that trend would not stop. The adoption will just fasten and got accelerated.
Adoption happens to be the name of the game because the more people are finding a technology they can use, the more they will use it, like a reinforcing loop in system dynamics. But you mentioned something a little about the merge, and right now there has been a lot of talk going on. I want to yield my time to you to please explain as much as you want what is the merge and how beneficial it is to the crypto community.
I mean, I'm not really an expert in mining, but I actually in the last week we just had a discussion internally about the merge, and my colleagues, my peers, was asking Shan, how is our opinion about the merge. So from my humble understanding, I think basically it's increasing the operation efficiency, and it's something that you see ETH. Really, it's by design we're going to this direction. So in the past, it's like for you as a miner, you just solve a primary school level puzzle, and you got work done. Over the time, you feel like you have to solve 12 questions, or you have to solve a whole set of exercises to get the mining work done. So over time, you will feel pressured that you have to go to this merge. On the one hand, is energy efficiency, right? So people talking about energy savings, energy efficiency. Then on the second hand is operation efficiency. In the past, it's mainly the token price dominating the computation power, right? Other than the computation power driving the way of the token value or the token adoption. So I think now you will see a change of power. So the increasing side will be the computation power, but also because in the past model it's more constrained by the computation power. So now it's different because shifting from a POW to a POS model means that so you will have fewer labor in the mining process. And you see some miners, they lost their job. They just heavily invest into the infrastructure, the servers, and they cannot do much with it. Probably they need to sell them to the gamers. Happy for the gamers.
They are right now, they're celebrating. They want the merge to happen now. Because let's be honest, okay. She mentioned some stuff. Proof of work, proof of stake, the miners. The proof of work is that you need to do computational solvings to get your Bitcoin or Dogecoin or whichever proof of work coin is. You have to mine it. That's what proof of work is. Proof of stake is like the possession, right?
Yeah, staking, you basically can think about I put my money into a bank, but the essence of the banking business is lending, right? So you use that staking amount to lend and to do securitized products. So supposedly, the fewer the staking, you get a higher ETH price. So the more stability on the price of the token. So in this case, staking is still safe because it's still through the private key, right? So the private key mechanism still applies both in the POW model and the POS model. So it's relatively safe and higher efficiency, lower energy consumption. So I think it's just a way to go. And as I earlier mentioned, the difficulty of uncovering. So in the past, you use the private key and you need to leverage a lot of computation power, and that total supply will be constrained by the computation power. Now you are less reliant on the computation power. So rather, the computation power now probably will become a driving force to dominate or somehow influence the price. So I think it's a really interesting shift. And I talked to the miners who are in the refi space. They also are in favor of it. They are already investing into like a renewable energy-based infrastructure, and they're bullish about the merge. So maybe the next 5 years we will see not the name of merge, but spurge. So it's just the right way to go, I think.
Yeah, because Ethereum has been always famous and linked with non-fungible tokens and other kind of projects. The problem is the smart contracts required these things to work. The gas fees, everybody was complaining about the gas
fees.
And going to know that the Ethereum will be into the merge to become proof of stake now reduces the gas fees, and also the energy consumption goes to 99.96 reduction.
Yeah.
So you have 2 wins already. Like it's going to be more economical, more environmental friendly. So the applications, if they happen to be consistent, yeah, that would be fantastic. Because what else do you want? I mean, you don't want to pay for fees, and all of a sudden you get a small product. You really want something that can produce money for you. And this is going to happen on September 15, right?
Yeah.
That's Thursday. Wow, that's very, very, very close. Because right now we are recording on a Saturday night, which is very fascinating. So that's something about the merge, about Ethereum. And you mentioned that there is always collaborations on art. We discussed about non-fungible tokens. Some people are still trying to figure out what is that. What is your point of view about the NFTs?
I think NFT is also here for long term, but from an investor perspective, we now see more of a hype in the market sentiment side. You see, so we are actually kind of an investor to one of the most famous app. So we invest into DoraHack, and DoraHack is the mother of Yoga Lab. So Yoga Lab is the one who created Bored Ape. So there are several reasons why this NFT thing is to stay for long term. Number one is you see we always talk about adoption, right? So on the adoption side, there is a strong demand in the market. Then there's also a stable and increasing supply of, especially you look at art, digital rights of art pieces. There are an increasing amount of art pieces produced in the form of digital format. So either music or the paintings, they are becoming more and more often seen in digital formats. Then I think secondly is with the maturity of the infrastructure in metaverse, in the NFT space, there will be an increasing adoption of the NFT application. So now we hear more often like NFT art, mostly JPEG, right? So, but there are more application models, such as in lending, collaterals, products. Then we also see NFT as a proof to certify documents in RegTech, for instance, for personal IDs. Then we also see NFT in ticketing, in hospitality, in travel industry. So it's becoming more and more a wider spectrum of application. So I think right now there is a hype because it's more focused on the art side, on the marketing side. It's more acted as a PR and marketing tool. You see a lot of Web2 players in the traditional consumer goods, luxury brands. They are coming into this space. And also earlier I mentioned about auction, family offices, funding projects. And then I see these different models coming into the space, but on the adoption side, there's still a lack of infrastructure support. So infrastructure support from layer 1, layer 2, and also from the investor side, there's still a lot of hesitation in terms of how this is different. And then on the art side, the adoption might only be for short term. So, for instance, the art pieces from some independent artists, like college students majored in arts, they are now producing thousands of NFT art pieces. But what's the value of those items? You can say that because now there's a hype, so the market price you see in each of the transactions, basically in the smart contracts, you record every transaction details. Where does it happen? Who are the owner of the previous transaction? Who will be the next owner? When did it happen? So all the details are there, and it provides unique value through proof of record. So, but there's no circulation value. You are not Mona Lisa. You're not the famous art pieces. So there's limited circulation. So again, you cannot ignore the fundamental principles, the economic rules. Without the circulation value, it will stop in the circulation process, and then you see a depreciation of that value. If you look a longer time horizon, maybe 5 months, you see the price on average dropped 70% of all the transactions, and now they kind of stopped transaction of the art pieces. So, but then there's also innovation in terms of how you design the business models. Some of the examples I see, one is the dynamic arts project we are in conversation with. So they basically turn this into a rental model and combine with traditional business in OTT. So Roku is an OTT provider. Netflix is in OTT business, right? So they embed the dynamic arts like Mona Lisa with tears falling down, and you have a flower, sunflower, and the sunflower is burgeoning in that art piece. You can zoom in, zoom in, zoom in infinitively to appreciate the art. So then each TV screen in your home turn into a dynamic art screen, and then you can shift from one painting to another. And then this becomes very valuable for hotels who used to be second tier, third tier, cannot afford a painting. And worldwide, there's also limited collections, right? So they do this as a rental model. The hotels and shopping malls, they pay $200 to $500 per week fee to the service supplier, which is this dynamic arts NFT platform marketplace. And then they also do like NFT ticketing for issuing concerts. In the past, you will observe those tickets by famous singers, maybe Justin Bieber, and you will see appreciation of the ticket value after issuance, after the first issuance, 5,000 USD going up to 50K. So that can happen in the past. But with NFT ticketing, you will have a stable price. You can even do arbitrage. So we have a company listed in our exchange, which is called Amaze Global. So they enable you to transfer the ownership of the NFT flight ticket from one person, from you to me, within 48 hours before you onboard. So when you purchase the ticket, it's not really writing the name to that real ticket, but just lock down that blank ticket. And then at the point of you transfer, so you only actualize the ticket ownership at that time. So imagine you purchase a ticket from KL to Boston now at the price of 1 Ethereum. Then 5 months later, maybe there's a surge of travel demand. The price increased to 2 Ethereum or 3 Ethereum. So then you can do a trade of that blank ticket, and you gain an arbitrage opportunity. So a lot of innovation, different application models, and also in OTT, right? So you can embed the NFT art pieces or the music. The music can change, adapt according to your mood. So according to your avatar, the music change. Maybe you put a rock avatar, then the music change to rock. So then the OTT content can be purchased through a TV remote. So you can appreciate the art pieces, you can appreciate the NFT music at your home. And this is collaborating with traditional business. So I see the line between Web 2 and Web 3 becoming more blurred. And now we have the so-called terminology Web 2.5.
Oh, that's a new one.
Yeah.
Who came up with 2.5?
So a few months back, a few investors, the VC funds from mainland China, they come to our Singapore office, and they were consulting us about how to do investment in Web3, because they have tried and they failed, and they don't really know how to do a due diligence for the Web3 projects. And you know the failure rate is quite high. In the traditional VC model, you hold equity stake, like diluting the company's share by 2%, 3%, 10% from angel round to pre-A, pre-B round. That stake is safe for you, because usually we will written in the contract that if the owner of the business, if the founder does not really deliver to IPO stage, or there's not a success exit, then they have to pay back at like a loan product. So pay back with an interest rate. So for investors, it's kind of safe. So for the Web3 projects, the crypto industry is quite different. When I first entered into this industry, I started to scanning the projects. A lot of them, they only have a pitch deck. That's it. And it would be rare to see someone who already had a product launch in Apple Store, in Google, with a minimum user base. No, that's really rare. And usually, even in that pitch deck, nothing else. You would see a valuation of like $1 billion, and then usually they will ask about 35 million USDT. So for us in the past, we mostly invest through USDT, through crypto, right? Crypto rather than equity. What does that? So it doesn't really protect you anything, because if the token never got listed in any exchange, if their product never see daylight, then that token is just like a vanity stock. It vanished when the projects dissolved. So it's very risky in this industry, as an investor in this industry, than compared to the others. And that's also why now we shrinked our ticket size we write that sentence demanding the project to make it convertible to equity in the terms. So this is very different from the previous industries. And what we call Web 2.5 is those who are investing into projects that's rather to our eyes Web 2, more like Web 2. So for instance, we met a project which is doing Web 3 version of TikTok. Basically, they incentivize the customers with their own tokens. But if the token never got mass adoption, means in exchange there's a minimum liquidity, minimum trading volume. So then the token price will never appreciate. So then for you as a user, you don't really have the long-term incentive to stay with that game, to stay with that app. So that's why we call them as Web 2.5. They are covering the code with the Web 3 technology, issuing tokens. But on the tokenomics design side, you don't really see the sustainability of it.
I couldn't realize like the goal of some people just showing the deck saying, yes, this is the deck, there is no minimum valuable product. How much are you asking? $100 billion. And it's like, is that a wild guess? And they will say, yeah, it's a wild guess. Come on, really? I mean, for them, from their perspective, it's like a free real estate. Like, yeah, just put a slide deck and ask for money and they will give the money. But it's fair that you're asking right now equity because, hey, the money is supposed for the business to help you grow because you're supposed to achieve certain percentage of growth either per week or per month in order to actually kick off, like go to the moon, actually. Not philosophically, but also in the exponential growth. And
That's one thing just to add on. We're also being more conscious and cautious about who we talk to. So because it's so risky, you know that 90% of them they will die, they will never see daylight. So we now do a co-investment approach. We partner with the other investors. We do a FOF model. We act as LP into investing into other funds, even funds of funds. So that kind of cross-validates our assumptions, our judgments, and really lowering and diversifying the risks. So also, I think in terms of the portfolio structuring, we are more looking into this long-term, short-term balance. In the past, we invest into GameFi, SocialFi, NFT, CFi, DeFi, everything. So now we are probably more heavy betting against infra project, which can bring in long-term value. And so we are not rushing into this short-term hype kind of things. And also for some of the short-term projects that are already in our portfolio, we are seeing opportunities to liquidate some of them. So really taking a very comprehensive approach in terms of how we structure to mitigate the risks. Yes.
yeah, it's all about mitigating the risk because that's the purpose of having a portfolio. And also fascinated to hear that you can do like co-investments that can not only reduce your risk and your exposure, but also to do cross-validation. Which has been the most fascinating cross-validation you've seen so far?
Yeah, so definitely we sometimes, I mean, as an investor, you got excited when you see good founders, good teams. A lot of the projects, because they are so early, there's not that much you can judge about their product. It's more about the people in the end. So number one is the market, which market they are in, which vertical, the market size, how big the potential is. Then secondly is usually the team profile. Have they done and exited multiple successful business in the past? Do they have the relevant experience in the same industry? For instance, if they are doing GameFi, do they have Web 2 game development experience? How good are they? So usually it's more about the team because industry-wise, you almost see in every vertical there are always very competitive landscape. So especially like payment is very crowded space. So there's one project. When I first met, I'm like super excited about the project team. The team is definitely an alpha team, an A team. So the founder and CEO come from an investment banking background, exited a few business, and then the investor as well as the founder, the shareholder himself has a legendary story, career story. So and then the product is so smooth. The game just in 3 months organic growth user base of 180K. That is really phenomenal because most of the projects teams they will have to find a marketing agency or they will have to go to an exchange to be listed in order to gain that amount of traffic. Then they also invested a lot into their technology, which means that they have a moat, and then they are building something that's really exciting, which was why I earlier talked about the Web3 version of TikTok. What they need a little help is to make it more Web3. But when we stepped in, we were super excited, and I have to tell myself like calm down and maybe check with the other investors how do they think about it, and let it soak a while and then think about it before we invest. So then I checked with a few other investors. Then I start to uncover a lot more details about how they currently structure the team, which part is the major cost structure. So usually that's a question we will ask, like what is cost structure? For profit margin, it's too early to ask because most of them, they don't have profit. So cost structure. Then I realized, okay, this founder is being too bullish about the project, almost like crazy. So on a monthly basis, the operation costs, mostly the labor, the overheads, is right, one to 2 million US dollars. So that means they have to push the valuation really high in order to get sufficient amount of funding to support them to go to the next phase. Otherwise, the fund collected will be just burning on a month basis for operation expense. So that's not what usually the investors want to do. We want to see that the investment goes to, for instance, infrastructure investment that support a 10-year growth, 5-year growth, or something like a strategic partner acquisition or refine of the team, upgrade of the talent structure. Then again, that investment should be nurturing your future growth, not just your urgency cash burn. So due to that reason, we think it's highly risky. And then also because of the high upfront in cost and investment done by the founder, he's going like too thirsty about capital. That's a signal of danger because he might lead the company to not fully right direction just because of the eager to capital. He might introduce unwanted capital that in the end can divert the direction. So due to above reasons, in the end we didn't really pursue with as a major investor, as a lead investor.
I'm glad you mentioned that because the unwanted capital. A lot of people right now in the technology side, they think that milestones are to go to the next.
Right.
Yeah.
So
it's
usually
not,
when you raise the first round, you should actually think about the next round. And we as lead investors, we often do posting investment interviews to ask, hey, how are you doing? What about your next round? What about your Series B? Any investors you are talking to? Any hope that you can close the round in next 3 months? So that's actually a critical problem, a question to think about. But also, you see in this bearish market, good projects, they are not rushing into raising because they know that now they will be undervalued. Those 3 months ago who asked for 35 million now will probably only ask 5 million. The price got cut half. Those good projects, they would pivot and they want a better price at the time market recovers. So usually when we see projects are too eager for capital, that's a no sign for us.
Yeah, because some companies they consider like elevating money raising money as a milestone, and other companies consider raising the capacity they have to build as an actual milestone. Like now you have these features, now you're reaching this kind of people. Like now you focus not to scale, but to focus on the consumer, on the user, and they consider that as a milestone. It's like now you realize the ones who really need the help. I mean, uh, they will be very upfront, but the ones who don't need the money are the ones that you really want to put the money into, because those are the ones who will give you the better return for some reason. Fascinating that you are doing the post funding interview, because that reminds me of a quote from Dr. Shaquille O'Neal, because he says he every time he does investment, he likes to see people win. Why he wants to see people win? Because when they're winning, they show themselves. They show who truly they are. It's like when you give power to someone, they don't change. They reveal themselves. So when you see someone is winning, let's see how they behave when they're winning. Are they actually the people of their word, or they are doing something else? So I believe that that's something that has to be impregnated into the education of entrepreneurship and innovation.
Agree. Again, I still don't think that everyone. It's not something teachable. I think I know that Professor Bill Ollett wrote a book about disciplined entrepreneurship, but I somehow do think that as a good entrepreneur, it's not only about setting up a company from ideation to incorporation to reach critical mass and then sell it. That you can call as entrepreneur, but good entrepreneurs, they are also usually social entrepreneurs who take responsibilities, who are thinking always for 5 steps, 3 steps ahead, and thinking for the long term. So I see more open innovation in this space, in Web3, in crypto space. Most of the good entrepreneurs, they do have the capability and the vision to usually share and proliferate their success. So I hope that that mentality can be proliferated and can be shared among you guys, the future entrepreneurs. And I think that's something more important than the how-to part, the know-how of how to build your MVP, how to do A/B testing, market product fit, how to raise funds. Sometimes when I was in the VC field, I talked to these so many projects. I noticed that some are really good at raising capital because they are so VC oriented. Some of the owners actually were former VCs. That explains why they are good at it. And then in the past, I usually for each deal, I will ask my manager, hey, why do they got these investments? The other company, they are doing the same thing to me, but why do they got it? The other didn't. And then yeah, this explains, because they are more VC oriented. I think certain things you can pick up the pitching skills, right? You guys are doing at the MBA program. Then these very mechanical and rigorous methods of how to test your customers' adoption, how to do marketing tests, how to strategize the go-to-market strategy. But again, to go to a longer term scaling up the venture, it's a really tough journey. It's more like a jungle exploration, to be honest, than mountain climbing. It's a combination of both. It's lonely when you grow, yeah, and then you sometimes feel just there's so much uncertainty, so much noise going on. So you have to like go back and calm down and adjust the team and pivot. So it's not really something you can be. I can probably deliver you this message, but in the end, whether you will be able to have this cognitive readiness or be really able to sustain of that mounting pressure, it's not really teachable. Yeah.
Those are very wise words, because one thing is the one side of the coin that discusses about pitching, about raising funds, and building, and the other side of the coin that comes with funding is the teachable moments. The Because otherwise, how can you reflect? Reflection becomes a huge weapon.
Yeah,
Yes.
reflection is a huge part of it. I remember when I first joined the company, my CEO and founder often tells us speed, speed, speed. It's about speed in this industry. And then you met the project teams. I remember one of the projects I met in Singapore. They were the superstar, the perceived unicorns, the next unicorns. In the Web3 space, they were doing GameFi, and then now they were doing infra. So they pivoted. And so I asked the team members, the core team members, why are you still here? The market is so bearish. Why didn't you go back to your law firm? So you can probably lie down and make a bigger chunk of money. So he said, it's difficult to get used to this Web2 living style when you worked for a while in Web3. That's how I feel as well. So one day in crypto, one day in blockchain space is like 1 year.
Wait a second. This is like Interstellar. You remember the movie Interstellar?
Interstellar.
Different
Yeah.
time frames.
Different time.
The theory of relativity happens there. So now Einstein has been right all along.
Yeah. Then after a while, so now it's my 5th month. Yeah, about 5th month, 4th month. So then I start to reflect the past 5 months, what I have done, which direction, strategic direction should I go next, how the company should adapt to the market. We have so many countries presence. Which one we should prioritize and capture the market size first, which one we deprioritize. So a lot of strategic thinking. You have to like unplug yourself to be able to plug in. Otherwise, you will be just flooded with each day so many new information. And in crypto world, each day you wake up, there's new terminology like the merge, a spurge. And then, yeah, new concepts every day will pop up. So continuous learning is one part of this being in this industry. But also, I think some of the principles in the financial rules, the first principles, should not be ignored being here with so many noise, such like the collapse of Three Arrow Capital. If we have respected well the highly leveraged, the leverage concept, which we learned from one of the MIT professor, and then we will be able to ask the right questions. Not that why they collapse, but why the hell in the first place they risked so many. So and then explains the collapse of the others. These cascading effects, domino effects of this highly leveraged concept.
The principles reminds me a book of Ray Dalio, but yes, to keep the very basic knowledge of economics to realize, is this making sense? Is this strategy actually make sense? Because the ethics of the business can be very blurred. Like you mentioned, that case that all of the students, the founders are right now in a yacht, who knows where, and the possessions you cannot repo because they are under the name of their kids because of some legal artifact they happen to do. And the people who thought they will become rich by putting money in this, those are the ones who are paying the huge price, after all. Now, you mentioned as well that this is something that an industry that always comes out with a new term. But also, good things always takes time. And I remember that you have been also involved in something that is called incubation. So tell us a little more about it.
Sure. So I'm now leading the incubation function, and it's really a very random idea. So back in June when I was in Dubai, we moved our office from one location to another, and I told my boss, why not we utilize this space and then turn this into an incubation center. So then the discussion only lasted for like 2 days. The third day, my boss told me just turn this into incubation center and let's get the projects come to reside and work here. let's get the investors to co-invest with us. So starting from there, we onboarded about 200, so about 200 partners, including co-investors, incubation centers that collaborate with us, source deals with us, from us, and then we cross-check the deals. And also projects who are searching for advisory sessions, especially heavily on the tokenomics designs. Then the advisors who are providing the tokenomics advisories, the simulations of the models, and go-to-market strategy, legal, so crypto lawyers. And then the...
Time out. Sorry. You're saying there are crypto lawyers out there?
Yes.
So I know some people that are lawyers. So how a lawyer becomes a crypto lawyer?
Interesting question. I first met the so-called crypto lawyer when I was in Istanbul. I asked the same question to her. How do you become a crypto lawyer? How do you define yourself as a crypto lawyer? All the legal authorities in each of the countries, they're still in the process of learning it and designing the framework. So then the answer is, this is driven by the demand of the industry. Because in the past, these lawyers are working mainly for tech companies. And then starting about six years ago, the clients start to set up these Web3, these emerging departments, exploring new business. And then that's how they started to learn about the concepts of crypto, blockchain technology. Basically, on the demand side, the surge of demand forced the lawyers to transform themselves, to learn more about this industry. Similarly, for the CPAs, for the accountants, they usually partner with the law firms. The lawyers will recommend me the accountants, and because again driven by the demand, so they have to come up with something new to the accounting terms, how to record those digital assets, how to classify them, how to report, how to do bookkeeping. So I think on the other side, it's interesting that the lawyers are also pushing the regulatory bodies to set up the right, the friendly legal framework that are in favor of the growth of the industry. A lot of the lawyers, both in Dubai and in Turkey, they are doing the lobbying work. They are advising the governments and they are lobbying the government to be more friendly, to be more open towards these crypto firms.
I believe when you're doing lobbying, you also need a think tank or something to be more approachable in order to co-create legislation. That's such a complex environment, let's be honest, because how can you create some legislation on something that still has no precedent, right?
Yeah, I mean, a lot of the feedback I heard from the project side and the other exchanges is we don't really want to be controlled, and we don't think this is something can be centralized. I think it's not about being completely centralized. Probably will be a equilibrium of some sort of control over the engagement of within retail investment. For instance, what you see with Luna's crash, right? So the governments, they are concerned about the risks, the damages to the financial markets, to the confidence of the retail investors. That's the part they want to protect, they want to stabilize. But on the other side, they know this technology is promising, solving a lot of problems, social problems, and then they are also learning. And when we talk to the authorities back in Dubai last month, we were talking to the virtual assets regulatory authority, VARA. So that's like a MOU. They are issuing a MOU license for all the crypto companies, allowing you to be in the queue. When there's a crypto license, you can get it. So they were very happy that we are applying it. Number one, because there are NFT projects, the crypto projects, Web3 projects, startups looking for community building, looking for higher liquidity, which can help with the token value appreciation. the adoption of the app, right? So then, due to that demand, they need to find the exchanges who can list the projects and provide the liquidity, provide the circulation. So it's essentially an exit option for the projects they incubated from the government side. So when they see us applying, they're actually very happy to see it. And then secondly, they are happy because they want to learn more from us. The due diligence process essentially is it's not an investigation process, but a combination of investigation, learning the risk levels, learning who is running this business. Is someone who coming from finance background understand and respect the financial fundamental rules, or is it someone who is a gambler, who does not have any know-how in financial industry? So this makes a difference to the confidence level to them. And then they are also learning, hey, how do you guys do a listing process? How do you scrutinize the projects to ensure that the retail investors are protected when they buy this token called Fabian token, for instance? Because the extra layer that we do at an exchange that adds to the confidence level of the authorities. In the end, that adds to this confidence, the financial product we introduce in the marketplace. So essentially, they are learning the whole process. They are learning our products, and they also want to learn what is the trading volume, like what is composition of your trading volume. Maybe 2080 rules apply, or everyone is performing average. So there are assumptions they need to test. They need to learn. Hopefully, through this learning process, they get to know better about the industry, and with the knowledge level increase, they can embed policies that are appropriate.
That's very good to know about the policies. I'm sorry to take you on this tangent because we were discussing about on the incubation side. Now that you are leading this area, and I know that in Dubai there is something called the FinTech Hive or something. So
Yeah.
how the incubator plays a role in the region?
Yeah, so we are still at the starting phase, but we are in close collaboration with institutions such as Crypto Oasis, CBDC, and in the US region, we are also bridging the conversation with the other regions due to the global profile we have. Every Thursday, we hold events we call Crypto Thursday. So whereby we invite guest speakers in mining, in VC, and then in project side. In each of the Crypto Thursdays, we will see 40% of them representing the VCs who are looking for projects, and then another 30% of the audience who are projects looking for funding. So I think the critical role here we play is to build the learning forum for the projects that are located in different parts of the world. For instance, the Southeast Asian projects, they're mostly in GameFi vertical. But they also want to go beyond current market, beyond home market. They don't really know the risk level of being in a different country. Let's say, for instance, you go to Dubai. So the licensing process, the process of getting the company registered, even as small thing as getting a bank account, is more trivial than Southeast Asia. And paying for a rent means you have to pay upfront 1 year rent for both office and for your own apartment.
1 year?
So yeah,
Wow.
That's a huge cost. And similarly, when you go to Turkey, you go to Istanbul, how would you anticipate that everyone just speaks Turkish? And when you hire accountant, you do the bookkeeping, it's all must be in Turkish. So a lot of unknown issues that you probably wouldn't have the energy to understand everything, or the financial flexibility to hire every consultant in every of the market you want to go. So we play a critical role in bridging that knowledge gap and shorten their path to different markets. Then the learning is also about how to mitigate the risks, the mistakes that the other projects have already made, or you tap in the complementary resources from the other projects that are also residing in our incubation center. For instance, you are a GameFi project and you are coming from a Web2 background, means that the gamers are a different set of group users. Probably you will find it very difficult to convert to Web3 gamers because the incentives are different. The original users, they are into the game because of the playability. Than in the Web3 space, because most of the design is financial incentives. So you will be addressing a type of users that are looking for higher returns, stable financial returns, less on the playability. So then we have another project who maybe embody already 2 million users that are Web3 native. So why not tap in those resources to you? And maybe you have the assumption that you should do heavily about paid ads. Then, however, there's another project in the same vertical, in the same region, who have already done that. And they show that, okay, the ROI for paid ads is only 1.0, and the average customer acquisition cost is $5. Then you know better how to calculate your cost into that part. Should you actually do that? You do a different methods. So these are the knowledges that we create, the knowledge spillover in the incubator, where the projects themselves do not have access to stay in their own office on a standalone working basis.
That's really important because innovation cannot happen alone. It needs a space. It needs also, what we say, a supporting system. You mentioned something during your explanation about the crypto lawyers, something about control. And this can be a little like a pushback, but central banks are doing CBDCs, the digital currencies. And that can be like an antithesis of people who wants to be on DeFi or having their own coin.
Here, you mean?
In most other regions as well. So, what is the central bank's digital currency, the CBDCs, for you?
Those are different concepts. Looking at on the China side, for instance, they are already implementing it, and you can so-called withdraw your digital assets from an ATM machine. But in the end, it's different. It's not really built on a public chain. So it's probably built upon their own chain, or not even built on any blockchain. So they are just transforming the format of the currency from printed version to digital version. Just think of it as Alipay or GrabPay. And then what essentially are doing is making the banks, the interbank transfer or the interbank transactions easier, or to them centralize the control of data, of the money flow. Because in the past, if you borrow like 1 million from Maybank, then you borrow another 2 million from CNBC. So you don't really, at least from the bank's angle, they don't really see the whole portfolio of assets you own from each bank and the loan you did at each bank. So these are separate data in separate database. So what they now essentially doing is merging those data. From the government's angle is you can see the person, Fabian, your digital profile of your whole portfolio of assets everywhere, omnipresent. So that doesn't really benefit the consumer, to my view. And that's why the adoption from the retail investors, from the retail customers' end, doesn't really change that much when they implemented it. I don't know what's the difference of the digital currencies here in Malaysia, but more or less it's the same. If you really are built on a blockchain, I think there's still a lot of risks for a central government to do so. So even in the current crypto world, there are still risks. So maybe someone can hack and falsify the data in smart contracts. What's funny, last May, I think starting this year, you see a lot of crypto wallet theft.
Mm-hmm.
So, for instance, we are staying in this bridge, and think about it, under London Eye, and your phone got borrowed. Hey, I need to check the phone on Google Map because my phone has run out of power. So then I used your phone, and I actually entered it into your Binance app or XT app, and just transfer everything to my wallet address. So that cannot be recorded in any forms. You go to the police cannot do anything. So think about one central bank controlling all this. I think the risks are huge.
Yeah, it's very important to take this kind of point of views because not because of the sake of embracing technology, all of a sudden everything has to be jotted down like a cascade. And I'm glad that you shared your point of view on this because otherwise, how we will ever know about this? Let's be honest. Talking about this, I believe give you opportunities to also talk in other places and in other podcasts. So this is like a self-reflection, but I want you to hear from you. How has been your experience speaking in other podcasts?
Other podcasts,
Uh-huh.
yes. I've been invited as a guest speaker for several talk show podcasts about my career journey. Yeah, I think each time when I was invited and I shared, mostly it's prompt to speaking. Didn't really prepare. Like this time, we don't have a question list. I don't have a draft. I didn't do any preparation or reading. Everything is really prompt to. But also due to these questions, some sparkling, thought-provoking questions I got a chance to reflect on myself, reflect the journey, and this really helps me to move forward. Each time when I receive the interview, I was inspired by the interviewer, and I was inspired by my self-reflection. Some of the points, the blind spots I didn't cover, I didn't think about. I was like, for some point, why didn't I ask that question to myself? So it really complement my self-consciousness. And this cognitive readiness, self-consciousness is a huge part of our MBA journey. And I think at the workplace especially, I noticed that people who receive the MBA education is more self-conscious than the others. More aware of which skill sets now I am leveraging. I'm now walking into a negotiation room. What should I prepare? What is the other colleague's strengths and weaknesses? How should I use his or her strengths to build a rapport from him or her? So I think we should continue that exercise to become more self-aware, also to adapt to the environment, to the culture where you are in. So, like for instance, today we talked about this Asian culture. I think that's really a good starter to start a conversation when you are talking to someone who is just coming back from a distant area, or you don't know so much about him or her. Just ask something that can immediately build up that warm relationship. Like last time I walked into a room and with a project, I didn't know where he's coming from then, but immediately after he answered, "Oh, I'm from Netherlands." Then I started to talk to him in Dutch. So these little small things, techniques, are very useful in my everyday communication.
Those are very nice reflections. And talking about reflections, there might be some young Shan Lius watching this. Maybe not in China, but maybe in Latin America, and maybe somewhere in Africa or Europe. And they will, they will like, okay, this is a nice journey, but what about advices? So maybe, what would be a piece of advice would you give to your younger self?
To the junior MBA.
No, I mean to your younger self, like
Uh,
the Shan Liu from 10 years ago.
Ah,
or the Shan Liu of the 20 years ago, what piece of advice would you give to that young person rather?
yeah. Uh, I would say listening skills. So, for instance, I mentioned when I was in Europe and doing my master, so I was more actively um, involved in the student activities and completing my study. So it's always like with a very clear goal and purpose driven. And I didn't really listen a lot or really embrace the culture. I was just receiving it reactively. If I were to go back then, I hope that I could receive the communication courses, negotiation courses back then, and so that I could leverage the skills in my daily communication with my classmates and friends, and build a more meaningful relationship with them. Try to understand and include themselves. So listen to them more. Then that would really help. Would have helped me to adapt and to build my global profile earlier than just recently. Yeah.
I guess I cannot find a better way to close this episode with such a fantastic reflection. How people can find you?
LinkedIn and Telegram.
Oh, that's nice. Well, thank you for doing this, Shan Liu.
Thank you.
And please, for the people who are out there, stay safe and see you when I see you. Bye.
See you. Bye.